From FXEmpire, this is Christopher Mullen from the technicaltraders.com. I want to recap major market indexes in crude oil. There's some big moves coming and it's going to be a really exciting time. So let's dig into the charts. We'll start off with the weakest chart of all, which is the Dow Jones Industrial Average. If we look at the recent sell-off, we broke the 2018 lows and it's completely crumbled below there. And now we're testing way back here to the 2017 January lows that we saw in the market. Overall, this should act as a small support zone. It was a consolidation through here. Overall, market oversold, ready to bounce. Now the Dow is the weakest, falling all the way back to 2017 lows. If we look at the next strongest index, that's the S&P500. It is testing the 2018 lows. We're right in this V-shaped recovery, a very clear standout low where the market last time had big panic selling followed by huge rally to multi-year highs and a very big rally from there in general right into this year. So this is a very significant standout high. That's where the market is struggling with, and I think it's going to find some support here. But if we zoom in on the short-term charts, it is still really bearish looking at this point. We're stuck under the 5-day moving average, which is this blue line. That is a high momentum trend. And until we break through that to the upside, it's going to be pretty scary downside price action. If you notice here, we have seen a series of red bars. We haven't had any more than one green up bar. Every time we have a green up bar, we're followed by some big selling. Yesterday was a green up bar. Today we're getting selling, and we are stuck under this 5-day moving average. And the problem here is we've got a big drop to the downside. Price has been consolidating. The more it trades sideways, the bigger the move to the downside. And the fact that we've got this drop right here, or you could argue it goes all the way down to here, we got this distance, we could see the market unwind another 5-10+% if this bottom falls out today or this week. So there's a lot of energy built up here. Hopefully we get some type of reaction. We start to go to the upside, but you got to be prepared. If you're not in cash and you're long equities, we could be in for another big downdraft. Now, with all that said, the market is starting to show signs that money is flowing out of safe havens and actually starting to rotate into equities. And we're still not there yet. Maybe next week or the following week, we're going to have a potential entry signal for the indexes to the upside as things start to rotate, but it is still clearly in a downtrend. And it's at support. If we break this support zone, things are going to get ugly. But as you can see on the chart, we still have room to drop down to this about 23.22 on the SP500. So we can still poke to new multi-week lows here and still hold this critical support zone. And we could pierce through that, but on a weekly close, we need to hold above this level. And if we do, I think we're going to have a beautiful, a very sharp recovery to the upside that could really generate some big gains. And as money piles into the stock market, we're going to see those safe havens unwind even more, and I think catch a ton of people off guard. Because right now, everyone is shorting the market, and everyone is still thinking gold miners are going to take off in bonds. But really, if the stocks bottom, money's got to come out of somewhere. It's going to come out of those safe havens. They're going to continue to collapse while the equities rally. The exact opposite of what the masses are thinking and doing right now. Now let's take a look over at the Nasdaq. It is the strongest index of them all. Yes, it's dropped the same percentage as the SP500 in terms of 30% pullback, but the SP500 pulled all the way back here to the 2018 lows. Nasdaq is still testing 2019 lows, very significant support level, so it's holding up the most. It's done the least amount of chart damage going forward here. It's broken this low, and it is now testing this important low here, whereas all the other indexes broke or are testing this low or lower. So the Nasdaq, if the market and when the market does rebound, eventually it will, just depending where, from here or potentially here, wherever it does, the Nasdaq should outperform. And at this point, if the market does rally, I think we could see a bounce back to 87, 80, the 9,000 mark to the upside. This could chop around for a while, put in a topping phase, And then we go in and we start a full out bear market, the first real down leg. This is the crack of the bull market. This here would be a bear market rally, and then we'd start a new leg to the downside. We've dropped 30%. I think we could see an easy 20% further, even more in the equities market, but I think the market needs to consolidate. Whether it consolidates sideways for a while in a smaller range or has a bigger bounce, either way, it's going to be seen as very bearish price action because the momentum and money flow has dramatically shifted from bull market to bear market phase. Now let's quickly take a look at crude oil. Going as quick as I can here. Crude oil, been talking with subscribers, showing how we've got this inside day from this big 25% gap down in price. The longer something trades inside this big down bar, this big move to the downside, the bigger the move to the downside will be. Now overall, we've got this initial drop in price where it dropped down here. If we throw Fibonacci extension, which I've already drawn on the chart, I'm going to go with the most conservative strategy, which is from this high down to this low and then rallies back up. Once it breaks this low, which it broke yesterday, the next downside target here is $17 per barrel. If we were to go on an extreme sentiment and go from where it started this rally, we could see potentially $14.82 or the $15 mark on crude oil. And this could happen. We've seen the markets drop this much before, so we are only potentially a couple days away from hitting $15 or $17 per barrel in the crude oil, at which point I think will be a very big measured move to the downside, and I think we could see some type of big bottom get put in place. But be aware, oil is in free fall mode. 17 is the next target, and trying to pick anything before that, I think is going to carry a lot of risk because the trend is down. Charts are pointing to this level. Now, a long time ago, back up at 64, the longer term analysis on the chart, when we zoomed out and used Fibonacci extension, 32 was our downside target, and the market came down. No one really thought it was going to get down to those levels, but that's what the chart said. That's what I've pointed to. It traded sideways for 7 days in this $32 range. Now it's breaking down the next target, 15 to 17. So just be aware, the charts have been telling all this stuff, and we are now working our way down to these levels. Anyways, that's it for now. Take care. Bye-bye.